gosh, look at the crowd.
Come this way.
Those who spread goodness radiate happiness to everyone around them. Introducing LOLC Finance Credit Cards. Fuel the goodness in you.
This is LMDtv, and I'm Fazmina Imamudeen. It is Dinesh Warusavitharana who will be joining us tonight. Hello, Dinesh. I warmly welcome you to the show.
Hi, Fazmina. It's my pleasure to be on the show tonight.
In summary, how is the capital market faring in the midst of the economic turmoil?
Fazmina, when you look at the capital market, broadly, what you are referring to is the equity market as well as the debt market. So if we first look at the capital market aspect, initially, as you know, the Sri Lankan equity market hit an all-time high some time back with the indices reaching new heights. From that high point, the market has come off naturally, expected, given the challenges. But what we have seen over the last few weeks is there has been a gradual recovery in the market. And if you see what's driving that recovery, you see that there's an improvement in corporate earnings. The companies which have reported earnings for the first quarter of this fiscal year, particularly in the corporate sector, that's the non-financial institution sector, has shown a remarkable growth in earnings despite the economic challenges. So that has fueled the somewhat recovery we have seen. And always when there is a challenging situation, there are good opportunities for long-term investors. So the capital market or the stock market is ideally a place for long-term investors to take positions based on their views and hold on to it for the long-term capital appreciation. So from that perspective, I think still there are good opportunities out there. And the economic challenges, though it's a dark cloud at the moment, there are silver linings in it. So there are still good opportunities for investors to invest depending on the growth sectors of the future. And of course, their holding power. That is the key. And but on the contrast, if you look at the fixed income sector, there we have seen the benchmark treasury bill rates increasing. So for example, the 3-month treasury bill rate was 30.5% in today's auction, but it was only 5.3% about a year ago. So that's a massive hike in a 1-year period. So that has led to a total dislocation in the debt market. Activity has come to a pretty much a standstill, particularly with regard to corporate debt. So I think this will be a temporary phenomena and it would settle down over the short term once there's great stability on the macro side, particularly once the IMF agreement is finalized, at least the staff level agreement, and when the government presents the new budget. With that, the debt market is also expected to stabilize in the near term, but it's some way off at the current point in time.
What impact will the likes of the impending interim budget and the next round of IMF talks have on the stock market?
Sorry, can you repeat that? I didn't quite.
What impact will the likes of the impending interim budget and the next round of IMF talks have on the stock market?
Yeah, so I think if we step back and see what's the root cause for our crisis, it's an issue of fiscal imbalance. Yeah, if you look at go back and look at the time from independence, Sri Lanka's has been running budget deficits. Even though we have issues with our expenditure, the main issue is with the government's revenue, particularly tax revenue. So we have been consistently undertaxing, collecting less tax than what we should have collected. And this has compounded over the last 70 odd years since independence and led to the current crisis. So we need to first instill fiscal discipline. And that would be the key focus area, I would think, in the new budget as well as the IMF program. What IMF program is telling us to do is actually good to basically manage our finances better. We have fiscal discipline. So what this would mean in practice is we would see higher taxes. Particularly if you look at the corporate sector and particularly some of the exponential increases in profits, I think there's a fair chance of a super gains tax being levied on companies which have seen a disproportionate increase in taxes. And overall, particularly in the high income earning categories, I would think there's room for further taxation. And at the same time, we need to recognize that the significant proportion of the population has been very badly impacted by the economic crisis. And they need support. And for this, I think the government will provide assistance. And ideally, this should be in a targeted manner. We should give targeted income support for these identified segments rather than giving blanket subsidies as we have seen in the past. So in summary, it would be a budget focused on greater taxation, I would think, as well as relief for the segments of the population which has been badly affected, and removal of blanket subsidies. So when it comes to fuel prices, electricity rates, and other utilities, I would think that it would be priced based on market prices rather than heavy subsidies. And then the other big item on the fiscal expenditure side is the SOEs. Certain state-owned enterprises have been a huge burden on the budget. For example, Sri Lankan Airlines. So we need to reform these state-owned enterprises to take out that burden from the budget so that the government has adequate resources to make those much needed transfer payments to the weaker community or weaker segments of the population, and invest in healthcare and education, which we have been lagging behind our peer countries based on some statistics I have seen.
What implications are there for a stock market which is dominated by a small circle of investors?
Yeah, so on the stock market side, particularly on corporates, since the taxation is going up, there would be a direct impact on profitability. But if you look at the profits those corporates have earned this year on an after-tax basis, even with higher taxation, I think still they will report year-on-year growth numbers. So fundamentally, the taxes would be balanced off by the higher profits. Most of the corporates would be making this year. And again, if you adopt a long-term perspective, today's investment decision is dependent on future outlook. And if you select the sectors which you believe has good potential given the local as well as global conditions, I think still there's good investment opportunities. So if you look at the global situation, Sri Lanka is uniquely poised to take advantages of our situation and our natural resources. So if we align our investment decisions accordingly, I think still there are very good opportunities for the long-term investor. But I would like to caution people from investing in the stock market as a short-term speculative investment. I think those type of opportunities need to be explored with great caution, because in this volatile situation, it's not the time for short-term speculative investment. It's a time for good long-term investments based on solid fundamentals.
What more can be done to attract SMEs to the stock market?
Yeah, so actually, if you look at the SME sector, they are the worst hit in the crisis. SMEs are the engine of growth of any economy. But currently, with treasury bill rates at 30%, SMEs are forced to borrow at even higher rates. So which has resulted in a lot of SMEs going out of business. And with that, creating large unemployment pools because they employ a lot of people. So at the moment, if you look at traditional SMEs, they are under pressure. So they are in a survival mode. And in this context, it may not be the best time for them to list. But at the same time, new opportunities are opening up. For example, agriculture has been the traditional strength of Sri Lanka. We are blessed with water. We have a well-advanced irrigation system, which has been neglected, but which can easily be resurrected with some renovations. And we have ample land, which is not cultivated, largely because this land is within the state sector and out of bounds for the people who want to put the land to productive use. And this you need to contrast with what's happening in Europe. Most of the waterways in Europe is drying up due to the drought. And food security is emerging as a key concern across the globe. So if we can get our act together, mobilize the resources which we have been naturally endowed with, I think there's a fantastic opportunity in agriculture. Not only the traditional agriculture, what we have been doing in the past, but technology-based smart agriculture. And if we can crack it, then there's enormous opportunity. And I think SMEs are best poised to take on that opportunity. So I think there's plenty of opportunities in non-traditional sectors, if I may call it, for the enterprising SMEs to explore. So that is one aspect. And with the current import restrictions, there's a lot of opportunities for domestic industries as import substitution. And provided the government comes up with a good, consistent policy framework, again, there's a lot of opportunities there. So for the new enterprising SMEs, there's plenty of emerging opportunities. And I think that will pave the way for SMEs to launch new innovative projects, and bring them to the capital market to raise capital from investors. And from the investors' perspective, they will be happy to support these projects because these are new projects, innovative, and doing something new.
The safest is taking steps to protect gender diversity in the profession. Can you elaborate on this?
Yes, achieving gender diversity is a key area for both the CFA Institute globally as well as CFA Institute Sri Lanka. So we have a number of measures and initiatives to promote gender diversity amongst our candidates as well as our members. So we are working to increase the role of women in finance globally as well as Sri Lanka, and empowering our members also to take different roles. So traditionally, the role of a CFA has been in the investment management industry. But we have seen our members charting out different roles. Some have gone on to become entrepreneurs, setting up their own businesses, leveraging on the finance skills, because finance is at the core of everything. So unless you get your finance correct, it's very difficult for your business to prosper and grow. In addition, we are seeing our members going on to have leadership positions as CEOs running their companies, as serving as directors on boards, which are more conducive in terms of work-life balance because it's a part-time role. So these are some of the functions we see. And in the post-pandemic era, working from home is becoming more of a norm than the exception. So that is also opening up a lot of new opportunities. So all these together is setting the framework for greater diversity and gender balance in the profession going forward.
The earnings of companies in the capital market have come under pressure over the last 3 years, as you mentioned. What are the implications of this, and is there a scope for recovery?
Yeah, so I think I would look at it in a couple of aspects. So if you look at the financial institutions, which has shown strong earnings over the last 2 years, they are having a moderation in earnings, as we have seen from the first quarter results, and they are likely to have tough conditions going forward, given the macro challenges. Then if you look at corporates, which are catering largely to the domestic consumer, now that segment has seen exponential rise in earnings in the first quarter. For example, if you look at LIOC, they had reported on around 200 million in profit in the first quarter of 2021. In first quarter of 22, they have reported over 10 billion rupees in profit. Now, this is a trend seen in many companies which are serving the consumer directly, even though it's not to that extent. So definitely that sector has done well. Then again, looking at export companies, again, they have seen very strong first quarter. On the flip side, we have tourism companies which have been unfortunately badly affected since the Easter crisis. And unfortunately, those companies will continue to undergo some stress until conditions improve. But looking at the rest of the year, for the companies to continue with performance, they need to be able to import their raw materials and other inputs for their production process, as well as they need to be able to export their products overseas. And in that context, there can be some challenges, partly due to the global situation, as well as the local context. Globally, also we see inflation spiking to over 10% in most developed markets like USA, UK. And in Sri Lanka also, it's rising rapidly. So these would put some cost pressures on the companies going forward. And on the demand side locally, the purchasing power has severely contracted of the public. So this could put pressure on the earnings of companies which are reliant on the domestic customer. But again, new opportunities open up to us. So if we get our agriculture value chain activated, and if we can export high value added products, that's a whole new market out there for us, which has not been exploited in a comprehensive and a coordinated manner. And with global commodity prices, food prices increasing, that's definitely a good opportunity for us, which we can easily reap with the available resources in the country.
How will the geopolitical tension impact investment opportunities and our own economic crisis?
Sorry, could you repeat the question?
How will the geopolitical tensions impact investment opportunities and our own economic crisis?
Yeah, so geopolitics is something we need to balance because even if you look at historically, even in ancient times, we have been a trading hub. We have balanced geopolitics, leverage on our natural advantage, and we have tried. And in the recent history also, we have been good at balancing the geopolitics. We have had very warm and cordial relationships with all our neighbors and the superpowers. So we need to maintain the same stance, balance this influence to our advantage, and at the same time leverage the advantages we have, our location and other natural advantages, to make maximum out of this location. Now we are fortunate to have preferential trade agreements with our neighbors, and unfortunately these agreements are not being used to its maximum advantage. We need to focus on these advantages we have and exploit these advantages. And if we do it, I think there's a good opportunity for us to develop our export sector very fast. And when we talk about investments, we need to think differently. Now, so when we talk of investments, we talk of foreign direct investments, and we talk of BOI, which talks about the investment commitments. We need to think out of the box. It is good to get investment into Sri Lanka, but we need to go deeper into it. And we need to see how much of these investments actually stay within the country. What we have seen in the past is people committing for BOI agreements to invest certain amount, large amounts of money in Sri Lanka. And in some cases, these investments are funded out of loans raised from the Sri Lankan banking sector. So to that extent, we are not getting any new money into the country. And further, a large proportion of this money goes out in the form of acquiring property, plant, and equipment for these enterprises to operate. So the residual investment left in the country is quite small. So we need to be smart on the type of investments we attract. We need to ensure that there is a very high degree of domestic value addition and that the investment in fact stays within the country.
There is a visible improvement in the capital market. It gained 2.6% last week. Will this gain momentum? Will this gain momentum? And if so, can it maintain stability?
Yes, so the capital market has been a bit choppy over the last few weeks, depending on the news coming out on the macro position, particularly the IMF program and the government budget. So I think in the near term or the next couple of months, there'll be ups and downs in the market, depending on the policy directions, what we will be getting, firstly from the budget, and secondly from the IMF program. But one thing is broadly clear, from the budget, definitely there has to be higher taxation to reach the budget deficit, as well as to provide targeted income relief to segments of the population. So I think that's something which is factored in, and interest rates would remain elevated given the high inflation level. So this would definitely have impact on companies with high levels of debt. But these are things I believe the market has already factored in. So this won't come as surprises to the market. I would expect the market to remain relatively flat or see modest gains in identified sectors in the near term. And certain sectors, like for example, agriculture, or which is focusing on new products, exports in particular, could see a sustained growth in profitability over a medium period. So I think there can be some improved performance in those sectors, so which would result in a better price appreciation in those particular sectors.
The investment banking and the brokerage sector seems to be more affected by the crisis than the asset management segment. Should we now move strategically to attract investors?
I think there's no better time to invest than in crisis. So in the market, there are two sets of investors. One set of investors who are looking to exit, and another sector who is looking to invest. And this is probably due to a different time horizon. One set of investors may have a shorter horizon and a different set of expectations and outlook compared to the other set of investors. And from the conversations I have been having with my colleagues in the investment banking space, they have been extremely busy over the last few months. So there's activity happening. So there are a lot of deals under negotiation. People are actively looking at investment opportunities, because particularly in the investment banking sector, you are dealing with long-term investors. So they are going with the intention and knowledge that they are making a long-term investment and they'll be in it for long term. And with that, they are selecting sectors which they feel have a long-term outlook. So I think those deals will continue to happen. And there will be a lot of opportunities for investment banking. And also with the crisis situation, the government will be looking at new opportunities to raise capital, to restructure SOEs. So that also opens up a lot of opportunities for innovative practices to come into the market. So I'm sure investment bankers will be busier than they have ever been in the past with all these opportunities coming to the market. Then if you again look at the asset management sector, now this segment looks at both fixed income as well as equity markets. So even though fixed equity market may underperform at the moment, there is a lot of opportunities in the fixed income space. So I think there's a lot of opportunities for both segments in the market. But what I would caution is against short-term speculation. So when there's a period of economic uncertainty, you should not speculate because you can get burnt. But if you are a long-term investor and if you have the holding power, then there's no better time to make investments according to your convictions than in a crisis period. But be warned, you need to have that holding power. So with that, I think it's a good time to make the correct type of investments. But before that, you need to do your research and have a solid understanding of the fundamentals as to why you are making that investment. And if you are satisfied, yes, you should go ahead.
The role of the capital market in setting economic parameters and allocating resources is crucial. Dinesh, you have spoken out about the function of capital market during these difficult times. Thank you very much.
Thank you. It's been my pleasure.
That's all from us tonight. Good night.
Don't forget to subscribe to our YouTube channel and follow us on Facebook and Twitter. Thank you for watching and stay safe.